Welcome, everyone. Thank you for signing up for today's very exciting webinar on life insurance, long-term care, elder care, and your aging plan. I'm Kurt, and I'm your presenter today. This is one of my favorite topics because it's an important one that we overlook because it's uncomfortable. We're going to run through a few logistics before we get into the presentation so you'll know what to expect, what will happen over the next 30 to 60 minutes. These slides are available upon request. My email's in the chat. My email's going to be on the slides. Just shoot me an email if you'd like a copy of the slides. We also have a recording of the event. You'll also see a meeting link in the chat. I'll explain what that's all about in a minute or so. Again, I'm Kurt LaLomia. My firm is Turning Point Financial. I'm a financial advisor. Here's a little bit about my background, my bio. I specialize with federal employees. Those are noted among the various designations. I started my career on Wall Street. I spent much of it in legal and compliance. And compliance is the reason I moved to the advising side of the business. Many advisors that I supervised, they weren't doing things the right way. My firm, Turning Point Financial, is what's known as a registered investment advisor. It's located in Frederick, Maryland. The SEC is our regulator. We're independent. We're a team of 25. We're also fiduciaries, which means we're required by law to put your best interests first. It's an important question we get asked every day. We have federal clients across the nation from most of the agencies. Next, our webinar calendar for the year, what we've done, what's coming up. If you're interested in a recording from January or February, again, shoot me an email. I'd be happy to share our YouTube recordings with you. This is what we're going to be talking about today. All of these topics are important. They all need to be handled. They're in no particular order. Today's presentation is educational. I'm not here to sell you anything. I think I'll open your eyes to some things. I believe everybody will learn something new. We'll have a Q&A session at the end. Your questions can go in the Q&A field or the chat. And you're entitled to a complimentary meeting for your participation today. The complimentary meeting is with me. That's what the meeting link is all about in the chat field. I'll have more to say on that a little bit later on. We're going to get started with life insurance, and then we'll move on to long-term care. These are the fundamentals, the most basic concepts of what life insurance is, what it does. Everyone needs to know this, and I surmise that most of you already do. This applies to all types of insurance: life insurance, homeowners insurance, auto insurance, and long-term care insurance. Life insurance is not mandatory in most cases, like auto insurance and homeowners. You don't have to have life insurance or long-term care insurance. Who needs it depends on so many factors. Each family has its own unique circumstances. A young couple just starting out with their career, maybe they have young kids, a new home, they're certainly candidates for some sort of life insurance. If something were to happen to one of them, an insurance death benefit goes a long way towards helping the survivor cope with such a devastating event. The mortgage could be paid off, the kid's education could be funded, and some extra cash would be around while life sorts itself out. This is the most basic, most common example of who needs life insurance and why. Most of you already know this. Life insurance can also be used to protect wealth. For the middle-aged couple who experience a tragedy, a reasonable death benefit may prevent the survivor from having to tap into retirement accounts early. When you do that, there's penalties, there's taxes. Life insurance would allow one to preserve the retirement funds for their intended purpose. Living benefits are new, and we're going to talk about those a bunch today. Living benefits allow you to use the policy while you're still alive for a disability, for a long-term care event. Older policies, vaguely group life policies, do not have living benefits. Some people use life insurance to give money to a charity or to their church. That's not everyone, but to some people that's important. And life insurance is an excellent way to accomplish a goal like this one because the death benefit is tax free. Wealthy people. Wealthy people can use life insurance to pass money to loved ones in a very tax efficient manner. There are major tax advantages and strategies that can be utilized with life insurance policies for some people. We do this with a lot of our clients, and their needs and wants include long term care planning, maybe a second home, funding grandkids' education. Life insurance can serve many purposes because it's really its own asset class. Just like owning stocks or bonds or real estate, there's a place in many people's portfolio for life insurance, and it usually involves diversification and becoming more tax efficient. How much do you need? Well, here's some of our thoughts, and it doesn't have to be that complicated. I'd recommend having someone help you out with the numbers. One thing that's not on this slide that everyone must understand is that Fagley becomes more expensive as you get older. And in our experience, private insurance becomes less expensive when you're in your 50s and 60s. We have a slide specific to that coming up. Next, we go a little bit deeper on your number. We all need to ask ourselves the question on this slide and give that some thought. It's a powerful question. Unfortunately, the table's not so easy to read. It's a life insurance needs calculation, and it's considering income replacement, debt, childcare, college education, an emergency fund, and burial costs. This person has insurance, but they're willfully underinsured by more than $1 million. If you don't have enough, it usually means only bad things for your family. And we've highlighted what that might look like on this slide. Again, this is unpleasant. Most people avoid this topic, and I bring it up because it's one thing that we all need to handle. Our last bullet touches on the new type of coverage with the living benefits, and that's tapping into the policy while you're still alive. It's a really nice feature to have this, and we're going to get into the details of that in just a few minutes. Two basic types of life insurance, term and permanent. Term is the least expensive type of life insurance. It's common, it's good. We sell a lot of it with the new living benefits. It's good for 10, 20, or 30 years. That's the term. Obviously, insurance companies, they like young, healthy people, particularly women. They're all in a lower risk category. Many times, term is all a person will ever need. Just to pause for a moment. First question is, do you need life insurance? Second is, how much? Third, what type? Permanent life insurance is as it sounds. It's forever. It's covering your whole life, and someone will get paid when you pass. Its premiums are paid during the entire time that you're alive. It is more expensive than term, and people have specific reasons or they're employing strategies when they invest in permanent life insurance. Here's some examples of how term is used. We've already touched on the first one for that unexpected, unforeseen, catastrophic event. Some people use term to replace vaguely, especially when they get into their 50s and beyond, because it's less expensive. More to come on that. We have some clients, they have insurance on their kids who have a lot of college debt. This is becoming more common. It's a very practical application. I think it makes sense that FEGLI would get more expensive as you age because your health has changed. You're in a higher risk category. Most people don't know this, they don't realize it because it's buried in their pay stub. And FEGLI's not very forthcoming about it. OPM offers a simple calculator to do the analysis, or we can do that for you. In my experience, the typical savings is about $1,000 a year for someone in their 50s. Private insurance does involve an application, there's underwriting, and that might not be appropriate for everyone, in which case you're better off sticking with FEGLI. Here's a real life example of what we're talking about. The term premiums, they're $475 in this example. They never change. They're level for the entire 30-year period. Here we're looking at a male who's in a good health class. We're insuring for $204,000. The FEGLI rates, as you can see, are less expensive early on at $424, but then jump up significantly in the following years when this person is in their 50s and 60s. If you look at the lifetime cost of this insurance and crunch the numbers, which I did, the private insurance, the term insurance for 30 years at $475, that's a little over $14,000 total over that 30-year time period. FEGLI, at the prices we have on the slide, for that same 30-year period, it's more than $27,000. That's almost 2 times more over the life of the policy. Wow. Moving along, new policies, old policies. Listed here, we have some of the benefits, features, and advantages you receive with today's new life insurance products that are available in the private market. I think you want to look at your old policy and see if you still need it, and then maybe look into whether or not that can be improved upon. We're going to shift gears into long-term care. I know this is a lot to know. It's a lot to understand, consider, evaluate, and certainly talk about. I've tried to summarize some high-level thoughts on the most important aspects of long-term care planning. Today's biggest takeaway has to be that long-term care planning will allow us to maintain our dignity and our independence longer than might otherwise be possible. Folks, this is pretty simple. Think about it. Maintaining our dignity and our independence, that's what this is all about. That's what we're talking about here today with long-term care. Insurance is one way to do that, but there are other options available, and we get to those in a minute. Some of you may be familiar that there are 6 activities of daily living. And when you cannot perform 2 of those, or you have a cognitive disability, those will qualify you for long-term care benefits. Some of these 6 activities of daily living, they include dressing ourselves, feeding ourselves, our mobility, are we able to get around on our own, continence. Long-term care insurance, that can be a smart strategy for people with assets, significant savings, and we're going to talk about why. In other words, it's a part of their overall portfolio and a way for one to live a dignified life and remain independent. Some comments here on the federal program, whether you're in it or not. Some of you are probably here today because of this issue and you want some answers. You want to know what to do. Our understanding is the current suspension of the federal long-term care program is on new applications. It's a 2-year suspension. My personal view, the program will not be reopened. It will not be reopened because it's too expensive to operate and maintain And that's the reason why so few insurance companies are in the long-term care insurance business. They've been burned. People are living longer, escalating healthcare costs. It's very difficult to manage. If you're in the program currently, you're likely okay, and I'd continue to make the premium payments. If you're not in it and you want to take action, being here today is an excellent next step. Here's what you all need to know. Essentially, there are five different ways to pay for or receive long-term care benefits. We'll talk about each of these in detail. There's government assistance, there's traditional long-term care insurance, there's hybrid insurance, there's the life insurance with the living benefits, and there's self-insuring with your personal savings. Your options depend largely on your personal and financial circumstances and what you expect for your standard of care, both now and in retirement. Veterans and people with low income who can't afford to cover long-term care expenses, they may be eligible through federal government programs, most commonly known as Medicaid, or there's the VA, or there are state-run assistance programs. You can't rely on Medicare to cover these costs because they don't cover long-term care expenses. Medicaid covers long-term care costs, but in order to be eligible, you need to qualify. And that's based on your income and that's based on your assets. Medicaid is generally designed for low income individuals or families. Benefits, eligibility, that varies from state to state, and the choices for where and how you receive care, that can be limited. So, just to expand on this for a moment, we oftentimes have people come to us saying, "Help me spend down my assets, help me transfer my assets so I'm able to leave something for my family and I can go on the government program." Something to think about with that is one, when you give your stuff away, you lose control. Two is when your time comes and you need care, you might not like the Medicaid facility that is your only option. So having assets can be a good thing. Be careful with Medicaid planning. Moving along, traditional long-term care insurance policies. You choose the amount of coverage, and how long you have to wait before you receive the benefits. Typically, you're going to pay an annual premium for life, just like homeowners and auto insurance. The slide highlights some of the advantages and the disadvantages. Next is the hybrid policy. We call it that because there's three different benefits that come with it. Its primary purpose is long-term care. That's the number one benefit. But if you don't use that, excuse me, there's a death benefit. There's life insurance built into it. Somebody's going to get a death benefit when you pass. There's also an option to get your money back. If life changes and after a period of time, you're able to get your money back. The hybrid is what I have for myself and my family. Someone's going to get something out of this type of policy. That's why I like it. Life insurance. We touched on how today's newer policies are cheaper and they have better benefits. One of those better benefits are the living benefits. They allow you to tap into the policy while you're still alive and use those for long-term care. You have to qualify, as you would with any long-term care product. Personal savings is our last one. If you want to self-insure, using your personal savings can provide greater flexibility. You get to make your own choices. Pardon me. Before using your savings, I think you got to ask yourself if your retirement plan is built to withstand these type of potential expenses. You also have to consider whether you have enough time to continue to save for this option, given you won't know when you might need it or for how long. And even if you believe your plan is sound, keep in mind that long-term care coverage can also help protect your other assets, allow you to pass your wealth on to loved ones. We call this portfolio protection. In other words, if you don't have long-term care insurance, and even if you can afford it, you may be forced to go into the market and sell your assets at an inopportune time. Let's say you had to sell last year. Stock market was down 22% last year. Not a good time to have to sell and come up with a bunch of cash to get into a long-term care facility. If you have the long-term care insurance, you wouldn't have to do that, sell into a down market, incur the taxes on top of that. Simply tap in to the insurance. If you do use retirement accounts such as TSP, 401k, or IRA, be careful and be aware of the tax ramifications on withdrawals. A lot of information, folks. I know it can be overwhelming. Our takeaways from today. Again, these slides are available upon request. Send me an email and I'd be happy to share them with you. We also have a recording of today's event. Our takeaways: know your beneficiaries. Make sure they're up to date on all of your insurance policies. There are tax strategies and there are ways to diversify using different types of insurance. Some of the questions we asked: do you need life insurance? How much do you need? And then what type of policy is best? Take a look at your pay stub. See what FEGLI's costing you. If you're into your 50s and 60s and beyond, it is definitely worth your time to explore private insurance, and it's likely less expensive if you're healthy. Aging plan. I talk about that a lot with my clients. We focused on long-term care insurance, which is one solution for your aging plan. Some people plan to go on the government plan and receive Medicaid. Some people will have their kids take care of them. There's lots of options. Have an aging plan, have a conversation with your loved ones about that. We touched on the federal long-term care insurance program, currently suspended for at least 2 years. And then meet with somebody. Meet with an expert to better understand your options. We suggest reviewing existing policies. If you don't know somebody, we can help you with that here at Turning Point. We're experts with insurance and we're experts with federal benefits. My contact information here on the screen and on the next screen. We're going to get to questions in just a moment. As we wrap up, I want to thank everyone for your patience, for being here today. My full contact information on the screen. Please reach out if I can be of service. Consider me a resource, whether it's now or in the future. We're going to get to questions in just a moment. Questions go in the chat. Early on, I mentioned a complimentary meeting. Everyone is entitled to a complimentary meeting for your participation here today. If that's something you're interested in, please send me an email and we'll find a time to get that scheduled.